and welcome everyone. Thank you for joining us today on the Refinitiv webinar series. Today we're covering the lessons learned. My name is Pietro Calandra. I'm currently Sales Director at Refinitiv for Pricing Services, and I'm the moderator today. Before we begin, just a few housekeeping items that you can see on the screen as well. And just to point out a few useful how the system works that we're using today. So at the bottom of your console, you'll see there's multiple applications that you're able to use throughout today's webinar. If you have any questions during the webcast, you can click on the Q&A widget at the bottom or possibly at the left side of your screen, depending how you have it set up, to submit a question. Please do use this. This is really something that we find very valuable in these webinars, having audience questions. So please do submit them throughout the webinar, and we'll try to get to as many as we can at the end of the panel sessions. We're also going to be having some live polling during the webinar. So we do encourage you to get involved. There will be a few polls that will pop up during the session. So please do select answers, and we are trying to use these to shape our discussion and make it as relevant as possible. You're also likely able to access a number of SFTR resources that we've included on the right-hand side under the resource list tab. And finally, we'll also be sending you a recording of this webcast, as well as a copy of the slide deck that we used today. If you do have any technical issues, there is a technical help board button on one of the widgets as well. So please do use that if there are any issues throughout the webinar. So to kick us off, where clearly most of us are still working from home, but financial institutions and market participants are very much having to prepare for and meeting market regulations that have come or are about to come. It's obviously clear that the pandemic that we're all experiencing globally exposed significant and very unexpected challenges to the market. This has resulted in having higher cost pressure on the client side, and obviously having to reprioritize initiatives and programs that weren't as prioritized in the past, such as resiliency and digital transformation. Now, whilst especially these last two challenges around resiliency and digital transformation may actually aid the ability to meet future regulatory change in the long term, they're clearly having an impact on the short and medium term on firms and market participants having to comply with an ever-increasing amount of regulation. In today's webinar, we're going to be focusing on the Securities Financing Transaction Regulation, SFTR, and especially on the lessons that we have learned so far along this journey. SFTR, clearly a European regulation, focuses on mitigating the risk within securities financing transactions, also known as SFTs, and obviously looking at all transactions where securities or assets are used to secure funding. This regulation affects a very wide range of financial institutions, unlike some predecessing regulation, and includes also non-EU domiciled firms with branch offices in Europe, which also explains why we have had quite a lot of interest in this webinar from outside of Europe. The regulation affects, obviously all SFTs, as I mentioned, and one of the clear outcomes of it is that all the SFTs need to be reported to trade repository within a specified time frame, and obviously must adhere to specific rules and transparency requirements for the reuse of securities that are posted as collaterals as part of the SFTs. Now, obviously, like many similar past regulations, SFTR is very data intensive in nature. It creates a data challenge for compliance teams, especially because they must source and collate data that is not only relevant, but accurate. And firms are clearly posing with a large challenge in having access to all the required data fields, and especially given the time limits that are imposed by ESMA reporting perspective. If we take a step back to January 2020, when ESMA published its final guidelines, clearly the world was in a very different place back then. Since then, we've had phase 1 and 2 reporting of SFTR go live. Credit institutions, investment firms, CCPs, CSDs, and of course relevant third country entities as well. This was kicked off in July, following ESMA delaying the original April date due to the pandemic. Phase 3 also went live very recently in October, and expanded reporting requirements to buy-side companies, including insurance firms, funds, and IRPs as well. Now from a regulatory standpoint, ESMA is focused on launching phase 4. This was coming in January. It's going to extend SFTR to all non-financial counterparties. And let's not forget that in between, we will experience the separation of the EU and UK SFTR reporting regimes due to the Brexit impending coming in January. So we've had a bit of months to look back and see that many market participants are already live with SFTR, and having the latter rollout phases just around the corner in January. So it seems like a good time to look back on lessons learned. And as well, we're going to be looking at the end of it, what we can expect toward with SFTR. Today, I'm very thankful to having on the panel Joe Salkwood, Simon Davies, and Joel Keenan, who have all been close to SFTR from a variety of different angles. And I would now like to pass it over to each of them for an introduction of themselves, as well as the company they're representing. So maybe we can start with Joe, if that's okay.
Yeah, sure. Hi, I'm Jo Salkwood. I'm the product manager for SFTR at Market Access, and I joined the post-trade business back in February 2019 to take on the challenges that are there for SFTR. For those that aren't familiar with Market Access, we have over 30 years experience and an industry leader. We offer a range of regulatory reporting services and players in the industry that have regulatory reporting services that we do. Our mission to client basis is strong, with around 330 clients to keep the service. At Market Access, in our post-trade business, we do two things that are core to our business. So that's pre-matching and regulatory reporting, and these two necessary items required for successful SFTR reporting. So for SFTR, we have a full front-to-back solution. We have a pre-matching tool. We have an SFTR regulatory reporting tool that performs eligibility checks, business validations, enrichment, and it's all perfectly packaged into an ISO 20052 message that's reported to a trade repository of your choice. We also have an ESO portal that allows the sharing of key SFTR data, including the BTI, loan allocation, and collateral allocation data, which is addressing the industry gap has been adopted by around 70% of the leading members of the sell-side SFTR regulatory reporting requirements.
Thank you very much, Joe. And I believe we had a few issues with your audio, so we might try and redo your introduction in a second. But can we have Simon? I'll pass it to you for now.
Hello, my name's Simon Davies. I work in the business development team at Pyram Systems. Thank you for having me today. We are a collateral management, exposure management, and securities finance post-trade reconciliation and automation provider. We cover products across repo, securities lending, and OTC derivatives. We help firms both on the buy and sell side manage, reduce risks, and create efficiency. And of course, we provide SFTR regulatory reporting services with our partners, IHS Markit, where we provide an end-to-end and modular solution for buy and sell side organizations and corporate clients as well.
Thank you, Simon. And finally, can we have Joelle, please, with a short introduction?
Yes, hello. I'm Joelle Keenan. I'm the regulation lead and content specialist in Refinitiv. In Refinitiv, we offer regulatory reporting solutions that meet SFTR requirements. We already provide reference data that could be used to classify any underlying securities or collateral referenced by an SFT. And we have expanded our data attributes coverage to cater for SFTR requirements. So we adopt a horizontal view of the regulatory landscape to ensure we can support the industry with their reporting obligations. Thank you.
Thank you, Joelle. And can we try and go back to Jo from Market Access just to see if we can redo her introduction, because I'm conscious that we had some audio issues beforehand. I think we might have to give Jo a few seconds as she's reconnecting onto the platform.
Hello, I'm here. Can you hear me?
Hi, Jo, loud and clear.
Hello, would you like me to reintroduce?
Yes, please.
No problem at all. Apologies for that. So I'm Jo Salkeld, and I'm product manager for SFTR Market Access. And I joined a post-trade business back in February 2019, and that was to take on the challenges of delivering SFTR. And for those that aren't familiar with Market Access, we have over 30 years experience, and we're an industry leader. We offer a range of regulatory reporting services. There are a few players in the industry that have the suite of regulatory reporting services that we do. Our MiFID II client base is strong, and there's around 330 clients using the MiFID II reporting service. We do two things that are key or core to our post-trade business. The first is pre-matching, and the second is regulatory reporting. And these are two necessary items required for successful SFTR reporting. So at Market Access, we have a full front-to-back solution for SFTR. We've got a pre-matching tool, an SFTR regulatory reporting tool, and we have a UTI portal that allows the sharing of key SFTR data, including UTI, loan allocation, and collateral allocation data.
Fantastic. Thank you very much, Jo. Before I'm going to launch to the audience, and then we're going to kick off a panel discussion. You should see very shortly a polling question come up on your screen. I'm going to read it out for everyone. This is asking what your firm sees as their main concern with SFTR implementation and reporting so far. Is this Brexit, operating model changes, UTI and transaction reporting matching, or something that we hear very often amongst our client base is lack of internal expertise in dealing with regulation. So I'll leave that on the screen. If you can all give your answer, that would be much appreciated. And I'm going to launch a first question to the audience, excuse me, to our panelists, which is what has the feedback been working with from various different angles on the reporting side since the implementation has rolled out, and maybe we'll start with Jo again on that one.
So we've seen a successful implementation for a number of our clients. Obviously, SFTR has been a long journey, and clients were providing feedback to industry bodies such as ICMA and ISLA way before go live, and they are now continuing to do so. So since then, ICMA have put around a list of around 50 concrete issues since go live, based on client feedback, which is being intensively discussed, and then where appropriate is raised to the regulator. From a market access perspective, we're seeing many firms, again, we talked about the challenges of sharing data. We've seen firms providing feedback around issues with ensuring valid LEIs are present and sourcing LEIs. And there's also been much discussion and feedback around the sharing of UTIs now, and obviously collateral and loan allocation data. There have been many firms that have been utilising vendors to help them do so. There are firms still out there that are struggling with this. They're obviously looking to ensure that they're resolving this as soon as possible.
Right. And is that something that you're hearing from your clients as well, Simon? Does that resonate on your side?
Absolutely. There have been challenges, and I know we're going to talk about those in more detail later on, but there are clearly challenges with something of such an enormous magnitude that's going to impact an industry like this. And as you mentioned in your introduction, the broad scope, the number of products, the number of firms impacted, there are clearly going to be challenges. Broadly, though, there's very positive feedback. I think the fact that we can compare this to EMIR, it's been very positive in terms of getting over that initial go-live date, the ACT rates that we're seeing, very good ACT rates, good pairing rates at the trade repositories. There's been a lot of preparation and testing, and the run up to this, there's been a lot of time to implement it. That's been really beneficial. I think there's a lot of relief in the industry. I think the phase one and two in July, and phase three were broadly much of the same. There wasn't too much of a spike or impact in terms of phase three going live. So there's a lot of relief in the industry that they've got over that initial hump. There's clearly challenges and things that need to be worked through. And I had to say that there's been great coordination across the industry. It's a fantastic job done by the industry bodies, AFME, ICMA, and ISLA. There's relevant regional bodies as well. There's been some really good work around coordinating and input into this. And a lot of firms have inputted into that, including technology providers like ourselves. And now I think the focus is around, we've got over that initial go-live hump. We've got over the initial shock. It's really now looking at the focus around operating model impacts, finalising things like controls, process efficiency. There's legacy technology in a lot of firms that they're having to overcome, and that impacts things like data quality and best practices. So it's really trying to now clear those out of the way, those challenges out of the way, and become a BAU and efficient process. And also, it's now about, there's a lot of data that hasn't been available before in the way that it's been available, and how can firms take advantage of that? And I think the focus now is actually, what do we do going forward? Clearly, phase four needs to go live, and you mentioned things like Brexit. So I think it's broadly very positive, and people are generally happy how it's gone so far.
Thanks, Simon. And I think it's always quite surprising to hear how clearly we're having a positive feedback after an initial regulation rollout, which is not something you always hear, but at least it's clearly a sign that the market is learning from the previous regulation, especially similar ones like EMIR that you mentioned. And clearly, I think, like you said, having lack of having a good time to prepare and knowing exactly what to prepare with some good consultations with ESMA has clearly significantly helped. Going to Joel, what do you see as feedback? And I'm especially interested from a data perspective, as it's probably been your main focus at Refinitiv.
Yes. Well, I would echo Simon and Joe on this one. I guess 4 months into the reporting, feedback so far has generally been positive, relatively compared to previous experiences, such as MiFID and EMIR reporting implementations. There are still challenging issues, and I believe we will cover them at a later stage. But from a Refinitiv standpoint, with our help and support provided to our clients, it has gone really well, bearing in mind the volume with the level of granularity that needs to be absorbed into the reporting floors. We're talking about more than 150 data attributes. So with a solid foundation, I think the feedback was very positive.
you all mentioned that there's challenges, and we'll definitely get to that into the next question, as I'm sure that's a lot of detailed aspects of the regulation that pose issues will come up. But before we do that, I was interested in having all views. We all clearly said that there's a lot of positives that have come out from this. Are immersed in reporting transactions and have processes in place that help this process leverage to help this. So what would we say are the main successes really that have come out of SFTR reporting, and let's say positives of SFTR reporting that have come out? And since you were especially positive, I'm going to hand it to you, Simon, as a first.
Okay. Again, I think the feedback is good within the industry, and we've talked about the challenges. We will talk about those. From our perspective with our partners, IHS Markit, we've seen a huge amount of really good engagement from our clients. We've got over 250 participants in our SFTR reporting solution, covering many different models, full end-to-end through modular reporting to help firms with their chosen reporting path. So we've got a really good ecosystem to help with sharing UTIs. There's a huge issue in EMEA, and it's particularly challenging within the SFTR world because of the legacy systems, the OTC processing that we typically see within this industry. So being able to share really effectively UTIs across very different participants in terms of their approach, buy, sell side, different size of organizations, and the flexibility that the industry's got without being able to help to manage that. Obviously dealing with the agency lending problem in terms of sharing data around allocations, that needs to be done in a timely manner. And so we've seen a really coordinated approach within the industry to deal with problems, and we're really proud to have been part of that as a solution for the industry. And as a result of that, we're seeing very good ACK rates, so over 98% typically for transactions, very good ACK rates to start off with, good pairing rates at the trade repository, some work to still be done around that. So I think that the cooperation and the learning within the industry, the coordination from the industry bodies, corralling everybody together to make sure they understand not only what the impacts are going to be, but also to help interpret and manage those impacts has been really successful. Again, still a lot to do, so we're not going to rest on our laurels. But generally, I think if we'd have known where we are now pre-go live, I think we'd probably be a lot more relaxed at go live date.
Fully agree, Simon, and I think clearly solutions such as the ones that your firms provide are clearly a huge helping to make the reporting go smooth. And it is impressive to see the kind of matching, the success rates of matching on TRs, how percentage that you would definitely not expect to see after such a short amount of time going live. Going to We've set the bar high now, so we've got to improve on that. Challenge. Indeed, there's no going back now.
Absolutely.
And Joel, what was your impression in terms of the major successes here for the market? I know that clearly there's likely to be possibly new data sets arising from these transactions, possibly more transparency. What are we seeing from our in terms of the impact of SFTR on the market?
Yeah, I would say lesson learned from previous regulatory reporting obligations has definitely contributed to where we are now, I would say, and the delay of phase 1 initial implementation date due to COVID. That's one thing, maybe one positive thing COVID has done, is it did give some time to the industry to be prepared, and that did contribute to I would say a successful launch by having phase 1 and phase 2 start on the 13th of July. And yes, I mean, I did hear from trade repositories that have seen a considerable number of validations as high as 90 to 100%. And that's, that's by itself figures do reflect how there are success stories in SFTR reporting.
Thank you. Thanks, Joelle. And indeed, I think, I think if one lesson that COVID has taught us with regard to regulation is that, obviously longer consultation periods probably lead to to better initial outcomes from a reporting standpoint. On audio, I know you had some audio issues. Are you back on? If you wanted to contribute on this question, otherwise I will go ahead.
Yeah, no problem. Can you just as long as you can hear me?
Yes, we can hear you very well.
Great. Okay. Apologies about that. So again, just to reiterate exactly what Simon and Joelle have said. So from our perspective, SFTR phase 1 and 2 and 3 went remarkably well, and obviously has done in comparison to previous regulatory implementations such as EMIR or FRANC, especially where there have been complexities of reporting volumes and data. So obviously we can see that those lessons learned from previous reporting regimes were taken on board, just to ensure that the delivery was as smooth as possible. And again, just to add to some figures, at market access, we're certainly seeing firms achieving almost 100% app rate or acceptance rate at the trade repository. And again, it's attributable to all those firms taking the time to do intensive testing, starting early. And obviously there was an extension due to the delays from the pandemic. I guess on average, we're seeing around approximately 94% app rate at the trade repository. But what I think is also really good, something to point out, it's great to see how firms are looking to platforms and to automate processes to allow reporting to become easier. Obviously, it removes the manual burden on ops teams. And since SFTR go live, in particular, we're seeing increases in the use of our matching platform. So since phase 1, we've seen volumes up by 43%. So yeah, there's some great of SFTR reporting. So
very interesting, Joe, and obviously, very impressive to see rates, and clearly, as you said, aided by technology and innovation around, platforms and reporting, which clearly are instrumental to the market achieving. So that question on the poll, a lot of you have answered. Thank you very much for that. Clearly, I think not surprising, one of the biggest concerns that the audience feels is present around the SFTR report is the UTI matching, which, amongst our tackled that now in our next model came on a percentage basis as well, which again was something that we also just covered from Simon's contribution. So thank you very much for that. It clearly resonates with what we're hearing from our panelists. And on that note, since I'm already seeing quite a few questions coming in from the audience, and especially the latest one, clearly we've seen a lot of great positives around the SFTR reporting. But what does the panel feel? You all to incorporate your view around the Brexit challenge as well, because very topical with a number of question marks around it, and clearly will have a major impact on SFTR. So let's start looking at the challenge. And Joelle, if I do.
Yeah. Well, from our point of view, we have I would state our main two are providing a robust and reliable static data or bond reference data like LEI, the security type, the maturity date, the termination date. They are key for the parties reporting obligations under SFTR. So if you have a portfolio of collaterals to report and you have one security missing any of its static reference data, it would lead to the whole report to be rejected, and you end up under-reporting. So that's reference to the UTIs and to the reporting and the cap in the reporting. That's really a challenge. And the second challenge we could see from our side is the ESMA's lack of communication and support. If you just read the official documents, the level 1 and 2 of the guidance, you would struggle to implement SFTR. It's ambiguous and complex. During the preparations for SFTR, we have faced numerous issues where we needed some sort of clarification from ESMA, but we missed the contact. So, ESMA has published its first Q&A on the 5th of November, and that's 3 months after SFTR effective date. And it still did not really cover a wide range of issues raised. So counting on the previous experience, as well as on the industry recommendations, such as the FSB policy framework and the market best practice, was definitely the way forward.
Right, and I'm sure that there's that probably Simon and Joe would have some experience there around the ESMA sides as well, and obviously some of that outstanding Q&A or the timeliness of that Q&A. Simon, just around if you agree with Joel's main challenges, or if you have any other ones you would like to include.
Yeah. No, absolutely. I think, first of all, going live in the middle of a global pandemic with everybody working from home was incredibly challenging and hard work. And we got there, and there was a lot of coordination and industry coordination around that as well. I think data's a big challenge. The availability, the quality. So much has been done around that, but there's still more to be done, whether it's through ESMA Q&A around clarifications. There's discrepancies between the ISO schema and the validation rules. There's conflicts there that need to be thought through and worked out. There needs to be finalizing of the Q&A, particularly things around the net collateral treatment on repos, the collateral field signage around how that's figured out and what firms need to do around that. Firms also need to be really good at really careful at looking at the best practice guidelines. Again, the information that ICMA and ISDA have produced around this to make sure things like haircuts and margins, they're really understood and you're reporting the right data. In terms of the Q&A, there's the questionnaire, one of the issues around UTI sharing. So a lot has been done. We're seeing really good rates, around 80% of transactions having UTI shared efficiently, but still work needs to be done. And firms are struggling with their operating model, and that's feeding into that UTI processing side as well. So the timing of life cycle events, how firms manage their processing is having an impact on that. And that's a big challenge for firms to adjust what they do and how they do it, but it's going to have an impact on their reporting regime as well. But we're seeing a lot more automation as a result of that. So firms are now starting to look at now the dust is settled, how can they focus on those operating model impacts, their BAU processes, how can they leverage SFTR and CSTR, that will be up and coming soon as well, to make improvements around how they process things, particularly around automation. And then there's the Q&A, the technical issues around making sure we understand and have guidance on those outstanding points. And the static reference data challenges, particularly LEIs on collateral issuers that Joel mentioned as well. So yeah, huge success in terms of overall and now it's dealing with these issues. They're not necessarily minor issues. They need to be carefully thought through and worked on, again, aligning yourself to the industry best practices and guidelines, looking out for the final Q&A answers, and how they're going to land will also impact firms as well, and they need to be carefully managed.
Thanks, Simon. And clearly, automation here is the ultimate objective, I'm sure, for a lot of. And interesting to see that even regulations such as SFTR that have actually come with an ISO schema, which was something we didn't have.
Yeah,
we're still having issues around making that match up with validation rules and vice versa, right? So it's obviously good to have standardization, but clearly there's a lot of work that needs to go, and come from market participants to ensure that we achieve that standardization. Joe, what about from a market access perspective? Are these the same challenges you're seeing, or is there some divergences? Any new ones? Anything you'd like to point out?
I think Joel and Simon have basically covered the same points that we have from a market access perspective. So that's obviously understanding the scope of the regulation. Do you have an obligation to report? Pulling together the complexity of having multiple internal systems and agreeing a workflow or an operating model internally. Obviously looking to source a vendor, obviously choosing a vendor. There's obviously lots of vendors out there that have the same functionality or the same tools to be able to do regulatory reporting. I think, we've touched on data several times already around, obviously the sharing of the UTI, any collateral allocation or loan allocation data. I think what is also, obviously from our perspective, we're seeing a lot of firms come back to us about the UTI generation, even though there were the surveys and questionnaires out there to agree with your counterparties and determine who should be the UTI generating party ahead of the go live. We're still seeing that at present, so it still continues to be a challenge. Obviously, we'll touch on Brexit a bit later. But I know that in terms of a lot of we've mentioned as well, the Q&A that has recently been published by ESMA, obviously there was only a few items in there that were addressed by the regulator, but there's multiple pieces of, or at least multiple things out there that need to be addressed and resolved as soon as possible. One of the issues with the Q&A is obviously understanding still what the regulator is referring to. There's still lots of grey areas and complexities in what they've included. So there's still open questions around that. And obviously there's the challenge of being able to implement the changes that are required, or anything that is required as a result of the outcome of the Q&A. And obviously being able to ensure that that's implemented as soon as technically possible, which can be a challenge for many firms. I think maybe this is something that we'll touch on slightly later, but I know that there's recently been a survey published by Capitec, which identified that greatest challenges with SFTR reporting mostly lie in the lack of expertise and a lack of understanding of the regulation, which obviously ties in line with Q&A, which I just referred to. And I think there was around 66% of the survey respondents that mentioned that. And then almost half of those respondents viewed the changing regulation as the main challenge for the next 12 months. So I think that obviously ties us nicely into the next challenge, which is Brexit.
A very nice leeway into my next question. So thanks for that, Joe. I know you've touched on Brexit already, so I won't ask you to repeat yourself again. But I'd be keen to get Simon's view on Brexit and how that's impacting not only from an SFTR standpoint, but possibly also how, if any, solutions need to be changed, or if you are doing any internal work around Brexit to make sure. Ready on go live.
I think you're going to ask me to talk about the broader impact of Brexit. We'd be here for, well, until it happens, basically. So, I mean, from an SFTR perspective, from a technical perspective, it's not a particular major challenge or issue, clearly firms need to be talking to their providers, whether it's ourselves or market access or other providers. They need to be looking internally if they're doing their own reporting around these. There's effectively going to be a switch to a bifurcated model of reporting. So you need to direct the trade to the relevant TRs, whether it's a UK TR or an EU TR, or potentially both, depending on the transaction. Now, I don't see that as a technically a huge lift. We're preparing for that, and we're working with our clients to manage that and be able to identify the relevant trades that need to go to the relevant TRs. So, and the main things to look out for there's going to be information coming out from ESMA and the FCA around how to deal with this and what they're expecting. But I think the main focus should be around branches. So whether you've got EU branches or UK branches in the other jurisdiction, whether you need to report to one or both TRs for those. And also MiFID reporting. So whereas we're talking about SFTR, there is a MiFIR reporting obligation for where you're dealing with central banks effectively. So what the effect of that will be on your reporting as well. And then we need to look at whether there's going to be divergence, and whether this is short-term or longer-term divergence between the reporting requirements between the EU and the UK. The UK Chancellor has already made announcements around taking things like Phase 4 out of scope within the UK, and how is that practically going to affect corporate entities that need to report. We've seen impacts around, originally relying on delegated reporting facilities, but because of cross-jurisdictional issues, it might create an actual reporting obligation on the non-financial counterpart as well. And then the FCA looking at their technical standards and publishing those for SFTR. So whether there'll be short-term or longer-term divergence between the EU and the UK needs to be carefully watched and obviously managed. And then I think there's a more broader implication, which is the interoperability between the UK and EU regulators. So there is an element of them being able to look at information across jurisdictions as a result of the reporting to the TRs, and what that will look like going forward, and then whether that will have impacts on a more broader regulatory impact beyond SFTR. So I think that needs to be carefully looked at, but I think that's going to be more longer term as well.
Question marks around not only the Brexit implications. Joel, what do you think you wanted to add from your side on it, and particularly on the on potential reference data changes on
Brexit? Yeah, SFTR itself has already been onshored into UK law. So recently, the FCA has published the related technical standards for UK SFTR. So they are publicly available on the website. In the short term, it's expected that FCA more or less will mirror ESMA reporting obligations. We heard from FCA that they have an appetite to simplify the reporting obligations. However, I think from an implementation standpoint, it will be a challenge for NCAs to duly report on the UK regime and EU regime. So we'll just have to wait and see how things evolve with Brexit.
Indeed, and it's going to have obviously a widescreen impact on a lot of other as well, where a lot of market participants are still waiting to and expect. That we've mentioned a number of facts and findings that have come out of phase 1 and 2, and typical to our webinar today, which is obviously a lessons learned from SFTR. I wanted to look at, as we've had 3 come live very recently last month. I wanted to ask the panel and get their views on if there were any particular lessons that not only market participants, but ESMA as well learned from phase 1 and 2 that were actually addressed in phase 3. And I'll pose that question to you, Joelle, to start off with, if that's okay.
Yeah, sure. Well, from Refinitiv point of view, we needed to be ready from day one, so 13th of July, irrespective of the phases. I think more importantly for us now is our ability to support our clients to comply with their reporting obligations and continuously develop or adapt our strategic regulation solutions to meet their needs, whether it's for EU or UK markets or even for third-party markets. So it's not really visible from our side how the evolvement has happened between phase 1, 2, and now phase 3.
Thanks. Simon, what about have you picked up any particular lessons learned from the first 2 phases?
Yeah, so I think it goes back to the successes and the challenges around UTI sharing and how to manage that. I think the field interpretation, the understanding and the industry best practices, again, the effort that's been put in by the industry and the industry bodies has helped. And we've learned a lot and helped phase 3 go live. I think, interestingly, phase 3 firms, asset managers have their own specific challenges. There's generally a bigger reliance around delegated reporting, whether that's, in particularly their agency lending programs are often using delegated reporting services, but also many firms are using their repo brokers and prime brokers to do delegated reporting. And that creates a control framework challenge around how do you manage that and the complexity of that and ensure that whilst your reporting is being done by you, ensure that you meet your obligation, because it is your reporting obligation. So there's a bigger reliance on firms around that, which we didn't see particularly in phases 1 and 2. So although phases 1 and 2 being live has benefited phase 3 firms being able to use offered delegated reporting services. So that's been a big benefit for them. And then there's a bigger reliance as well on phase 3 firms in getting their UTIs from counterparts. And it's about how can they efficiently do that with the infrastructure and the technology that they've got available. And then finally, I think the reuse calculation. So this is a challenge where you're using delegated reporting services and using particularly agency lending versus repo, is that phase 3 firms need to figure out how they do their reuse calc and report that as well. Again, the effort put into phase 1 and 2 firms in terms of what the reuse calculation is and the interpretation of that has benefited phase 3 firms, but it's a particular challenge that they need to overcome in terms of how they do that reporting, particularly where they're using delegated reporting services as well.
Indeed. Thanks, Simon. And it's a good point you bring up around delegated reporting, which I'm sure is something very relevant to Joe's world as well. Is that resonate with you, Joe? Simon's view?
Yeah, completely. Again, we've talked about much of the success and the challenges as the lessons learned as well. But just, I guess, to add to what Simon was saying, there was obviously understanding the operating model. So phase 3 firms need to understand who was to resolve the exceptions, how to resolve the pairing and matching issues, and determining whether you're going to use a vendor and which one you should choose. So obviously a lot for phase 3 firms, this is the first time that they were seeing regulatory reporting. Going back to the testing and how, from phase 1, that was a lot of the successes were as a result of testing as early as possible. So obviously that was passed on to phase 3 firms. Thorough testing is obviously key to successful implementation. And then I guess finally, again, just another one is just ensuring that static data was collected, updated and stored. They were referring to AIs, CFI code, etc. Collateral quality, ensuring all the data is there, prepared, and obviously Joelle touched on that earlier. And I guess for those firms, it's obviously ensure that, for example, in the case of LEIs, ensuring that the periodic reviews are scheduled to ensure that that data is constantly up to date and accurate.
Indeed. Indeed, and we know how crucial LEIs are to a number of different regulations as well. I'm conscious of time, and I know I still want to get through one last question, and I also have another poll question that I would like and ask for the audience to please respond on. And this is, hopefully we'll get it up on the screen very shortly. And this is essentially going into 2021. What key priorities are you seeing around SFTR reporting? And especially looking at obviously your firm. Is this improving quality of data, enhancing internal knowledge on SFTR and expertise around the regulatory reporting side, increasing efficiency on the processes and controlling reporting costs? Obviously, I think during today's conversation, we'd be very keen to have your view as well. And this to my final question, where I'm going to try to combine two questions into one, essentially. And I'd like to get the panel's view on what the future of SFTR will look like. What are the key things that are going to be considered? And tied to this question, are we expecting any changes in the regime on the back of this initial implementation that we've just seen? I'll start with you, Joe, if that's okay.
Yeah, sure. So I guess in terms of the what does the future look like? I touched on earlier that there's obviously ICMA currently they've put together a list of around 50 concrete issues so far, based on previous regulations and experience from that. And there's always going to be issues that linger for some time following regulation go live. And obviously lessons learned, etc., will filter to the regulators who will inevitably take those on board. And obviously that's become apparent from the first Q&A that's been published by ESMA. So again, we may potentially look to see refit exercises, additional validations that are implemented or tightened in the future. I guess for some firms who are further behind and are looking to ensure the problem of reporting data, ensuring accuracy, completeness, and timeliness to the trade repository to ensure that they're receiving 100% accurate, it's something that they'll be keen to be focused on in the coming year or two. And obviously, it's following that perhaps the pairing and matching will become more of a focus, particularly given that that we've had phases that's gone live now. I think it may be good, I guess, to look back at the question of why SFTR came about, and obviously it came around in 2008 or thereabouts. We had the global financial crisis. There was, regulators have no controls in place to understand what's happening in the market. So because of the lack of transparency, the regulator effectively put speed bumps in the road to the regulation, so that if there was a crisis again, they'd have the ability to adapt. So all because of this, we've mentioned as well that we're seeing firms looking to platforms, automate processes, etc. But that data that's being accumulated allows firms, I guess, to come into the new world of technology, AI, and machine learning. So that could potentially enhance and facilitate processes which will assist with, again, the completeness, actually, and timeliness of the reporting that's required. And I guess with the future, as well as SFTR, we need to look back at the securities financing part of it, which helps, I guess, all this helps to improve better pricing discovery, particularly in securities financing, and therefore create better efficiency.
Fantastic. Thank you, Joe. Joel, what do you see as the future of SFTR, and what's Refinitiv considering for the next year, and how the regulation might shape itself?
Yeah. From Refinitiv's point of view, we have two important milestones. The Brexit on one side, we've already covered, and the mandatory reporting of LEI codes for non-EU issuers on the other side. And this is, I think it's a high topic. Everybody is sort of pointing their eyes into that direction. So for those who are close to ESMA, they are aware of the 12-month grace period granted for the reporting of the LEI codes for non-EU issuers. And that will run out in April 2021. So GLIFE and DANA are already, the numbering agencies that are actively working on getting the LEI up to speed. And they're also trying to sort of match LEI to ISIN as well. So we're currently closely monitoring their initiatives, and we're trying to leverage on the identified gaps. But it is still work in progress, and it's not easy to reach a good quality of LEI coverage. So this is definitely a challenge. As for the changes, I would think it will be a bit difficult from an implementation standpoint to see any drastic change to the reporting regime on short term, especially that things are working well. So what is expected in the next year is ESMA's report on the efficiency of SFT reporting. And that is due on the 11th of April, 2021. And then a year after, by April 2022, the Commission will issue its report on the efficiency of the SFT reporting. So we'll wait and see how things evolve and what can come out of those reports.
Thank you, Joel, and especially grateful as you've just answered one of the audience questions that had just come in around obviously the meaningfulness of LEIs and how there's clearly still some gaps in that process, but there's clearly a lot of work going on behind the scene that gets smoothened out going into 2021. Simon, I'm going to ask you to please restrict your answer as we've clearly had a lot to talk about and we're running out of time. But please, I'd be keen to have your view on the future of SFTR as well.
Yeah. So again, to echo Joe and Joel's responses, short term, I think we're going to get the responses to the Q&A and we'll have clarification around that. Although I think that's going to be drip fed into us because clearly the current situation is impacting ESMA's response times, etc. So I think that will take a lot of time to work through. Longer term, again, I think we're going to see ultimately an SFTR2 at some point. We've seen it with other regimes, either a refit or a new version of the regulation. That will come post the ESMA EU Parliament's review of what's been done so far. So we have to go back to the driver of this, the FSB requirement. So will we see more regulation in other jurisdictions and a rollout there, but also some of the other aspects of the FSB requirements around things like mandatory haircuts, etc. Will we see that starting to feed into any SFTR2 or SFTR refit more longer term as well? But again, clearly the current situation with the pandemic, will these things be delayed further or not? With Brexit happening, will there be as much EU appetite for regulations as this, and will we start to see divergence between the EU and the UK, and therefore we won't get other jurisdictions, or we will get other jurisdictions implement this sort of regulation as well? So definitely one to keep an eye on longer term.
Indeed. Thank you very much, Simon. And clearly, we've seen throughout the panel that there's been some great progress done. I think we can all be very impressed with how the initial phases of SFTR reporting have gone. Clearly, some unknowns yet to come, especially around Brexit and how some of those technicalities still haven't been answered. And of course, the major LEI and UTI matching challenge that would still persist. And there's clearly a lot of work going on behind the scenes for that. It'll be very interesting to see the efficiency report around SFTs that Joel just mentioned coming up next year. I think will obviously shed a lot of light as to the impact of SFTR on the market. And clearly, like we said, a lot of positives, still a few unknowns, but clearly some very good work happening behind the scenes from both solution providers and market participants coming together on these challenges. I'd like to thank everyone, definitely our panelists, Simon, Joe, Joel. Thank you very much for your inputs today. I found the discussion very useful, and thank you very much to our audience for participating on the polls. Just a quick reminder that you will be receiving a recording of this webcast, and I will point you again to some useful resources that should be on the right-hand side of your screen with a few useful documents. On that note, I wish you all a great rest of the day and look forward to speaking to you on our next webinar. Thank you very much.